Good day, trader. So it's been an incredible journey with you during this Forex Master Class. I just want to thank you for taking the time and effort to learn how to trade this extraordinary market. We've covered absolutely everything I believe you need to make second income from trading Forex. But here's the reality, and that is your Forex trading career has only just started. So you're going to make your own decisions on how much you want to make and how much you're going to risk in this Forex market. So this journey to bank an endless stream of income starts when you're ready. So today I'm going to cover everything that I can that we've been through in the lessons in a nutshell over the last year. And this way you can, fresh your mind, you can have this revision so that you can prepare for your Forex trades that you're going to take on a daily basis. So for the last time, congratulations on taking this milestone to learning how to trade Forex. I trust it's been not only an informative journey, but also an exciting career path that you'll embark on and enjoy for you and your loved ones, and also that, so that they can benefit from the Forex. And remember, I'm always here. So you just go to the Investors Club today and ask your question, comment on what you thought about the Forex Masterclass. You can even, if a trade's lining up, tell me about a trade's lining up. I'll give you my opinion. And just as a last point, as a bonus gift, because you've been with me throughout this entire journey, I would like to give you one more thing. And that is the 5 Deadly Forex Mistakes presentation I did at the Balalaika Hotel in Santon. It was actually the first presentation I did in 2013. So it wasn't, in terms of my presentation, it wasn't the best, but the content is so valuable because it's something that we didn't cover in the Forex Masterclass, and that is mistakes that people make and novice people make so that you don't have to. So it's up to you with your school fees with trading. But I think after you've watched the presentation, which is about 48 minutes, I'm sure you'll enjoy it. It's actually on a YouTube channel, but the YouTube channel is private. So not everybody can access this. Only if I give you a certain link can you access the video, because it is valuable and I'd like to give it to you for free. So I think we can get started and just sum up everything that we've learned. I'm going to try to go as quickly as possible, so because you know this stuff by now. So what is the Forex market? It's a $5.3 trillion a day industry. It's known as the FX foreign exchange market. It's the largest market in the world, and you can buy, sell, exchange, and monitor currencies. You only need around 500 Rand to start trading, or you need nothing at all. You can start trading with a demo account. I recommend it, oranda.com, because you don't need to put any fees up front. You can try it out as many times as you want. Remember, if you can't profit as a demo trader, you cannot profit as a real trader. So get going with the demo account, set it up. I sent you so many calculators that you can view your stats and your track record and everything else. Remember, you only have to worry about the tight bid and offer spread, and this can range from 1 to 9 pips for major currency pairs. And anything more in the broker or market maker is ripping you off. So find another broker, right? Next, there's only 2 parties that trade Forex. It's you and the market maker. The market maker makes the currency market. They risk their own capital. They bring liquidity in the market for creating trends for you, and they take the opposite trade that you'd take. And if you're the buyer, the market maker is the seller, and vice versa. So why Forex? Well, you can trade any time, anywhere that you, whenever you desire, or anywhere where you desire, anywhere in the world. The Forex market is a spot market. It runs on 24 hours a day, 5 days a week. But just confirm with your broker about the certain times. There's more liquidity with Forex because there's huge amount of money going into the market, so strong trends develop, and you'll be able to flow in and out of your account. Currency pairs, only 2 things in a currency pair. There's the base, which is the first part, which is generally the strongest, not always, and the second part is the quote, known as the term, count, or variable. And each currency pair has 3-letter codes around the world, so it's universal. So, for example, the US dollar, Zuid African rand, and you'll notice that the end letter usually represents a currency, but not with the euro. And I think because there's huge nations, huge nations that have combined together, so it's not really a country, but that's the only exception. So to open a Forex account, you go to the website, you look for the registration link, you fill in the mandate, send them an email, send your FICA documents, fund the account, and then send a proof of payment to the broker to complete. So out of 2 of the most common questions I get asked is, do I need to open another account to trade other instruments? No, not with GT247, MT4, and IG markets. You just need to open 1 account. And the second one is, what if I want to start with a demo account? Like I've told you, go to oranda.com. They'll give you a $100,000 demo account. But don't just use that $100,000. Use the amount of money that you would use on your own account so you can see your progress with trading. The top currency pairs to trade, do you know which are the most popular? Coming third is the pound. Coming second is yen. And first is euro dollar at 28%, because they are the two biggest nations in the world, the European Union and the United States combining. So that makes sense. These are the 9 top currency pairs that I trade with. You've got them in previous lessons. So remember, print out all these lessons, have them by you as a guideline. You know, it's not just a once-off thing. You go through this on a daily basis to grow your portfolio. The most dangerous currency pairs are these minor currency pairs. They're not completely dangerous, but remember, they're not the most liquid in the world. Some of them have high bid and offer spreads, so it's more dangerous than the major currency pairs. But I do know some currencies like the CAD, Canadian dollar, and the JP yen, that has quite a tight bid and offer. But at the end of the day, it's not considered a major currency pair. So you know what a pip is? Percentage in point, the smallest part of a currency. You know that all of the currency pairs, I have the decimal to the 4th place, except the yen, which has the decimal to the 2nd place. The bids and offers, you know the bid or buy price, so that it's the highest price the market maker is willing to buy from you or other buyers. So you look at the bid price when you want to sell your Forex trade, and the offer trade, which is the sell price or the ask price, is the highest price that the market maker is willing to sell a currency price to you for. So you look at the offer when you want to buy a currency pair. You look at the price that the market maker is willing to sell it to you for you to buy it, right? Then you know that with the depth, you'll see the symbol, the bid, and the offer. How do you close your Forex trading position? You just reverse the position. So if you buy or go long a currency future, you'll close it by selling the contract. If you sell or short a currency pair, you'll close it by buying the contract. So if you want to close your trade and you phone your broker and you say, I want to sell my currency future, be very careful, because if you shorted it, they're only going to short more. So the safe option is just for you to say, I want to close my trade completely. That's all you need to say. Or I need to cover my short. Or I need to close my long. That's the safest. Right, going to the charts. 3 trend lines you need to know. There's an uptrend which has higher lows, which creates a support line. So we look for 3 or more points which give you a higher low support line. And then you have a downtrend which shows you resistance, which is more than 3 points of touching a resistance line. Sideways trend, it creates this consolidation box formation where the price is touching on the resistance line more than 3. But be discretionary with this. For example, here's 3 points that's touching. Does that mean that this is a sideways trend line? No. Why? Because discretionary wise is that the market has not chosen a direction yet. So wait for the charts to create these candles and see more or less what the trend lines are. And that's the reason why I'm telling you these systems word of mouth rather than just selling you a box, because you cannot sell a box with these type of strategies. At the end of the day, your brain and eyes, by bias confirmation and pattern recognition, is more powerful than all the computers put together in the entire world. So we need artificial intelligence before we even think of creating these type of strategies to the point that you have. What you have in your mind right now of a system and a profitable strategy is more timeless and profitable than any system in this world, right? So we also know that we looked at candlesticks. I'll give you a few seconds just to look at the candlesticks. You remember that each candle has a wick, has an open and a close, and a doji candle where the open is equal to the close, where there was undecided buying and selling pressure, which ended up at the exact same point. So next thing, we looked at the time frames, which suits you. If they short-term time frames, then you'll be more rushed and have adrenaline to get into your trades, more anxiety and pressure. But if you're like me, who looks at longer time frames like 1 hour, 4 hour to weekly, I don't look at weekly, to be honest. I can look at daily, but it depends on the risk in the trade. Then you feel less rushed. It's a calmer approach to trading, and you'll have more time to clear your mind to take the trade. I want this to be a stress-free environment, and because you're trading with money that you can afford to lose, then it should be even more stress-free, all right? And protect yourself. So always put in a stop loss. And if you're worried about a stop loss because the market might gap, then go and grab that guaranteed stop loss option that GC247 offers you. They'll take the risk if the market gaps, and you will not lose more than you were willing to lose, right? 4 levels to get into your Forex trade. You know it's the entry, the stop loss, the take profit, and the initial margin. You know that by now we are breakout traders, so you'll have your system set up. You don't care which way the market breaks. It's easier to base your stop loss levels, and you'll gain peripheral vision for the different market environments that line up. So here's an example in 2013, not a great chart, but my photoshopping skills wasn't that great at the time, where the gold made this huge box formation twilight zone, broke below it, and I gave a target of $1,231, which it did hit. And then, people said, so are you going to buy from this level? What do you think? The market is crashing. The market is making new lows. Why would I buy it? I would follow the direction rather than not follow it and then just reverse it. Why? Because I'm now getting my ego involved. I'm getting my greed involved. I don't care when the market turns, and when it does turn, I will follow the market with it. There is no ego in trading, especially in a $5.3 trillion a day industry where it is all discretionary at the end of the day. So you base your predictions on probabilities and not actual predictions, right? We looked at the box formation where we had the box line up. We then get into our trade. We base the stop loss on the half distance between the high and low of the box, and the take profit we based on a risk to reward of 2. You've done all this. I'm not going to go through this. Where basically the distance between the entry and the stop loss, you add this distance and you'll get the take profit, which it hit very nicely in one candle. So you see, once it breaks out of that formation, it flies, and it's going to fly with or without you. So get into your trades. I sent you all these calculators to work out whether you're a spread trader who looks at rands risk per pip, or a currency lot trader, whether you look at micro lots. And then the risk to reward. Remember, we're only always looking at a risk to reward of 2 and not 1, because if you're taking hundreds of trades later, you'll find that 50% of your win rate will leave you at break even. But if you have a 50% win rate and your risk reward is 2, you'll end up with more profits, because between your entry and stop loss, you take a certain loss. But once you take a profit, it means that you'll have to take 2 losses just to break even, right? And that is the idea, that you can make an income with any system, with whether you're a day trader, intraday trader, scalper, you're a trend trader, breakout trader, reversal trader, continuation, reversal, all these type of traders. It does not matter as long as your risk to reward is greater than 2. Then we went through the break-even rule, where we have our ghost level, where once the price reaches a risk to reward of 1, you raise your stop loss to the break-even level, or be sneaky and move it 5 pips above, so that when it breaks that level, you will be your win rate will go up. You would have banked a profit, and it would have been well worth it, right? And we dealt with the time stop loss, where once you get into your trade, add 35 days afterwards. Remember, I showed you that little trick on Excel, which will tell you that after 35 days, get out of your position regardless of where the market is at that moment, right? So after 35 days, remember, you're going to always bank less profit, or you're going to make less loss. But at the end of the day, you get out of that trade. Your opportunity cost is more important. So you need that money to trade in more high probability trades. When do you never trade Forex? The first Friday of every month, when those news events comes out. Remember the non-farm payrolls and the employment levels. When that comes out, do not trade the entire day. It is not worth the risk. You don't want volatility when trading. You want neutral market movement environments. Okay? And it all boils down to, once you have the entire strategy ready to trade, it boils down to the discipline cycle. You have the discipline to follow the strategy. Keep consistent. Gain your confidence by taking winning and losing trades as long as you follow the strategy. Have the patience for the system to line up, and I promise you profits and success will come through in the medium to long term, not short term. Don't care about the short term. Just make sure you get the discipline right. And when you go through your drawdown, then go to your psychology. I promise you psychology helps. Go watch YouTubes, go read my stuff, go to trading tips, whatever you want, but just stop trading completely if you're down more than 15%. Go back to demo trading until the portfolio picks up. talk to me at investorsclub.co.za, and I'll help you as much as I can to get your portfolio going up. Remember, you got Trading Tips e-letter, which you must read every day and see new things that are coming out. We got the Facebook page, which is doing very well, and I send out new alerts as they come out, so sign up to the Facebook page. And Trading Tips Television. If you don't have time, to read another word after work, you just want to take your shoes off and lie on the couch and watch some YouTube, go to Trading Tips TV, see what new videos are lining up, and that should help. And if you have any questions, remember, go to investorsclub.co.za. It's absolutely free, and you can ask me a comment, tell me of trades that are lining up, or anything. Now I want you to go get a cup of coffee or tea or whatever your favorite beverage is. Rest completely, because there is a lot that we went through today. And then when you're done and you feel ready to go and watch more, remember, you have the 5 Deadly Forex Mistakes presentation link that is in that little PDF that I sent you. So you can click on that link, you can watch it. It's a presentation on what people make mistakes. So once again, thank you for being with me during this Forex Masterclass journey. It's been an absolute pleasure having you throughout all these lessons. I hope it's gained some education and some ideas for your career path going forward, and also just a way of life, how to see it in a humble way to trade. So if you have any questions, remember, go to investorsclub.co.za, and I'll always be there. But until then, I wish you all the best with your trading, Forex trading journey, and I will speak to you soon.